Good afternoon, people. It is Saturday, June 29th, 2:20 p.m. It's good to be back home. As you may know, I was in Boston all week, and I feel like I missed so much action. I was checking the gold prices, reading when I could, but I just feel without doing these videos, I feel like I was just missing so much of the action. And there's so much to talk about. I got a stack of papers. I don't know if we're going to get to everything, but I want to start. I just want to jump right in. Now, when I left off, I had said that the fact that it was able to hold that key 1340 level was a tremendous positive sign. And we breached that 1400 level. And we actually got up to about 1440. And we've backed off a little, okay? If you look at the price action the last few days, they've been trying to take it down below 1400, and they haven't been able to, okay? So I think that's a positive development. Now, I also said that all these Johnny-come-latelys were going to come crawling out of the woodwork, okay? Some with pie in the sky projections, others with get out now, it's going to collapse and all this stuff. And that's what I've seen. I drove up to Boston. It's about a 6-hour drive. And I put on YouTube, and I was watching a lot of YouTube videos myself. And they're all over the board, okay? Like I said, difference of an opinion, that's what makes horse racing. But that doesn't mean everybody's opinion is right. It is possible to be wrong, okay? So, I got so much to talk about. Now, first thing I want to talk about is, I said it's going to start going mainstream. I open up the web, and my typical homepage, I'm seeing gold articles now. It's not buried in the weeds. It's right there, okay? And here's yet another one, right? Gold's rally to 6-year high spurs people to sell their old Tiffany's and Rolexes. Haven't we seen this song before, right? Haven't we watched this movie before? Haven't we heard this song? Right? It took getting up to 1400. That was enough just to sell their old jewelry and Rolexes? What's going on here? How desperate are these people? A $50 move is enough to get them to sell their Tiffany's and Rolexes? Empire Gold buyers saw business activity climb to the highest since 2011. On such a small move like this? The highest activity since 2011? There's something wrong with this picture here, people. When the precious metal traded at a record, CEO Gene Furman said, at House of Khan Estate Jewelers, trading of old jewelry is up by almost half since last week. When the Federal Reserve signaled its openness to cut interest rates, propelling bullion prices higher, the company's president, Tobina Khan, said. This is crazy. Refiners and recyclers of the precious metal are riding a rally as investors' interest returns to gold after years of languishing mostly below the 1350 an ounce level. More than $4.6 billion was added to exchange-traded funds linked to the bullion this month, and that's important, people, because when I was a novice in this market, I used to think that it was the mom-and-pop person who's, calling up a gold dealer like me and buying gold that was moving this market higher. No, it's when the big money fund managers get into this market that it moves. And they can move it up and they can move it down. See, when I was a little kid, I remember in the 70s, right? You got picture of these gold lines, right? Wrapped around the corner, everybody buying gold. I didn't see it this time, right? It was more like a stealth bull market. You got to watch what the big money is doing because they can take it up fast and they can take it down fast, okay? It's not the mom and pop person buying some coins that's going to move this market. More than $4.6 billion was added to ETFs linked to the bullion this month, buoyed by a record daily inflow into the Spider Gold shares. People are coming out of the trenches, said Furman, the chief executive officer of New York-based refiner Empire Gold, which buys old jewelry for recycling and refining. Cartier, Rolexes, Tiffany's, Van Cleef's. We see an uptick in the luxury market because people need to raise money. In the greatest economy in the history of the United States, people need to raise money. What a shock. So they got to turn in their $25,000 Rolexes and maybe they'll get a couple of grand for them. Okay? Why do they need to raise money in the greatest economy that America has ever had? I don't know. But this is what's happened. And this is what it takes. We've seen this before. So they're going down to their jeweler and they're getting some money because they need it for their old jewelry on a $50 move. Basically, that's what it was. $1,350 to $1,400, a $50 move, and they're coming out of the trenches. I'm going to say this, people, the next article. If you're not prepared to, I'll use the word, endure moves, big moves, which could be coming, you got to think long and hard if you're going to be in this market, okay? Because I'm already seeing articles. Gold is down off its high. 1440, it's at 1410. What are you talking about? This is an article, okay, from Wednesday, September 17th, 2008. And I saved this article. And I remember this day distinctively, where I was, what I was doing. Gold contracts, remember this is 2008, September 2008. Gold contracts for December delivery rose as high as $90 per troy ounce on Wednesday, up 11.58%, or its highest level since August 8th of this year. The move came as investors sought a safe haven from high volatility in the markets. The CBOE Volatility Index hit an intraday high of 35.76, its highest level since January 22nd, 2008. Okay? Gold prices exploded today, posting the biggest one-day gain ever in dollar terms. They were up $90 that day, as fears of more credit market turmoil unnerved investors and triggered a flood of safe haven buying. Gold for December delivery rose as much as $90.40 or 11.6% to $870.90. That's what it was that day. I mean, it went from $780 up to $870 basically in one day. $90, right? These days could be coming again, people. We could have $100 up days, $100 down days, okay? So these days at $10 up and down, $20. No, you got to get used to this. You're going to have to get used to this because these days could be coming. And if you're not aware of this, okay, you're going to be, taken off guard. $90 in one day. Why can't that happen again? I believe it will. So all this noise that's out there, you got to tune it out. You have to tune it out. Okay? If anybody's getting bent over out of shape because it went from 1440 down to 1410, okay? No. So there's so much more to talk about. I knew something was going to come out of this G20 that's going to juice the markets again, okay? And that's this cease in the trade war, okay? The worst case trade war scenario was avoided in Osaka on Saturday, when Trump agreed to restart trade talks with Xi, holding off new tariffs on Chinese exports and signaling a pause in the trade hostilities between the world's two largest economies. Okay, this will juice the markets. Okay, how much juice can they get out of this trade war or spat, whatever it is? I don't even know anymore. Trump added that while existing tariffs would remain in place, the U.S. president eased restrictions on Hawaii as part of what is now the second ceasefire between the two superpowers in 2 months, removing an immediate threat looming over the global economy. It goes on to say, I mean, there's no surprises here. None at all. Okay? Trump, the greatest deal maker in history, he doesn't seem to be making such a great deal. I don't know. I think it lasted a lot longer than he expected, and it's a lot harder than he expected, not for nothing. But this is where we're at. Now, I also had a chance to listen to Bullard, okay, the other day. They interviewed Powell, I think it was Tuesday or Wednesday. They interviewed Bullard, right? Bullard says inflation running below target. Growth has been higher. Labor markets are tight. That's what he's saying, okay? That's that old Phillips curve again. He's scratching his head. Why can't we get inflation, right? So he says, and he was a dissenter, there's a good chance for an insurance rate cut. An insurance rate cut. Let's just cut the rate, as insurance, okay? He says the Fed is not capitulating. They're not, because the interviewer asked, are you capitulating to Trump? Oh, no, we're not capitulating. We don't cave to outside pressure. Oh, no? But you'll cave to the stock market. Who are you kidding? Of course you're capitulating. Of course you are. You went from rate hikes are going to be on automatic pilot, right, just a few months ago, to we're going to cut rates a quarter of a point, 50, a half a point, three-quarter, who knows? Of course they're capitulating to the markets, all right? So much in the stack, I won't get to all of it, so I'm just going through things a lot faster. These markets, this economy, it looks as if the signs everywhere, everything is just coming down. Everything is coming down fast. The savings rate, people are not saving. The yield curve is inverting. There's just so much going on right now. And here's this Atlanta Fed, right? Now, this Atlanta Fed, it was just not that long ago that their GDP now estimate was 2%. It's now down to 1.5. And not only is the Atlanta Fed down to 1.5, but the blue chip consensus is now approaching 1.5 as well. Okay, and I just want to show you this. Okay, that's that Atlanta Fed GDP now. Okay, it's that yellowish green, right? It was hovering at around 1. It went up to about 1.5. Okay, then it went to about 2. Now it's back down. And that blue chip consensus line is leveling off. Then it went down. Then it leveled off. Then it went down. Okay, so they have a 1.5 second quarter GDP estimate. The second quarter is in the books, people. I don't see this number changing all that much. So how is this the greatest economy in the history of the United States? Please explain that to me, Mr. President, because you're the one who's saying it. The greatest economy in the history of the United States. Now, you see this man? Some of you might know who he is. You see this man, I'm sure all of you know who he is. You see any resemblance there? I don't know. Maybe it's a stretch to me. Maybe I'm just being a little bit sarcastic. But that man is P.T. Barnum. And I always refer to P.T. Barnum, right? The self-proclaimed con artist. And he was very proud of it. Behind every crowd is a silver lining. That was his motto, okay? Con artist, P.T. Barnum. President Trump, con artist? I'll leave it for you to decide. Is there a resemblance there? I think there's a little one. Maybe not in their face, but in their MO. Let's move on, people. Because as this economy is going down, things can go down fast. All right? And I'm thinking about the Titanic. At 11:40 p.m. on April 14th, lookout Frederick Fleet spotted an iceberg immediately ahead of Titanic and alerted the bridge. 11:40 p.m., right? It goes on to say between 2:10 a.m., it's an hour and a half later, and 2:15 a.m., a little over 2.5 hours after Titanic struck the iceberg. Oh, yes, my mistake. 2.5 hours after the Titanic struck the iceberg. Her rate of sinking suddenly increased. And that's what I see happening here. her rate of sinking suddenly increased as the boat deck dipped underwater and the sea poured in through open hatches and grates. Okay? It then goes on to say a very interesting article here. With hundreds of people still clinging to it before finally floundering at 2:20 a.m. It floundered at 2:20 a.m. So we are looking from 11:40 p.m. when Frederick Fleet spotted the iceberg, right? And 2:20 a.m., right? We're looking at 2 hours and 40 minutes. That didn't take long, people. It didn't take long. All right? 2 hours and 40 minutes. All right? For the unsinkable ship to sink. Okay? Now, it also goes on to say, okay, the water temperature in the area where Titanic sank, which was well below normal, also contributed to the rapid death of many passengers during the sinking. Water temperature readings taken around the time of the accident were reported to be 28 degrees Fahrenheit. Okay, typical water temperatures were normally in the mid-40s Fahrenheit during that mid-April time period. The coldness of the water was a critical factor, often causing death within minutes for many of those in the water. So the boat didn't take long to sink, and if you survived that and you were in the water, you didn't stand much of a chance. You only had minutes, basically. Okay? And I hate to say it, but that seems to be the analogy here. Because I think these markets and this economy, when they go down, they could go down fast. All right? This video is getting kind of long. I just want to close on one other thing. And that's this Merrill Lynch. Okay? Merrill Lynch caught criminally manipulating precious metals markets. Thousands of times over for 6 years. Okay? I can't tell you how I feel. All right? We all know it's been manipulated by these crooks. All right? Their fine was $25 million. Okay? $25 million. They must have made hundreds of billions, if not trillions, on these trades, spoofing the market. Okay? And they walk away with a $25 million fine. What about the victims? I want to see these sons of bitches. I want to see what they look like, not for nothing. If it was up to me, I'd throw them all in jail. They don't get out. They get one stale, moldy piece of bread a day shoved under the door. Because what right do they think they have to break the rules as if they're somehow better than everybody else and the rules don't apply to them? And the harm and damage that these sons of bitches have done to ordinary people. Remember when it was pure tinfoil hat conspiracy theory to accuse one or more banks of aggressively, compulsively, and systematically manipulating the precious metals, gold and silver market? We do, after all, we remembered the claim over and over while demonstrating clearly just how said manipulation was taking place, often in real time. Well, it's always good to be proven correct, even if it's years after the fact, okay? I want to see what these people look like. Why don't they put their faces up in the post office, for example, so we can see what these sons of bitches look like who did this? Put their names in the paper. Put their names in the Wall Street Journal. Put their names in the Financial Times. Put their faces in the post office. Do they even get barred from trading again? Or do they get a bonus? Remember in The Big Short? Mark Baum, right? The famed short seller. He goes to Vegas, right? He wants to see who he's betting against. And he runs into this guy, right? Who's working out of, I think it was Merrill Lynch, as a matter of fact. He's working out in the Merrill Lynch building, right? And he's the one stuffing these subprime mortgages, right? Into these mortgage-backed securities. And he's standing there eating his noodles, right? Living high off the hog. And Baum is like, let me get this straight. You work for Merrill Lynch. They tell you the crap to put into it, right? They get you your clients. They tell you what to rate it, right? Just how are you representing the investors? Oh, well, we're not in the same building as Merrill Lynch, but we can take a helicopter ride and get there. And it's amazing, people. It's amazing. I want to see these sons of bitches' faces in the post office. Okay? I really do. And finally, Mark Barney walks away, right? And he says, you know, you're a really big piece of crap. And he goes and he walks away and he says, I got to get moral redemption, right, at the roulette wheel. What a statement that was. I'm going to get moral redemption, right, at the roulette wheel. I say to myself, I got to get moral redemption at the racetrack. It's really true, and it's a real shame. This is what it's come to, people, okay? And anybody out there who has the nerve to say that these markets are not manipulated, what more evidence do you want? Anyway, that's it, people. It's a beautiful day out there. I'm going to go out, enjoy my day and the rest of this weekend. I hope you do the same. And I'm hoping to find time to get to do some more videos. But if not, let's just watch this gold price. Now, it looks like, again, I'll close with this. They're trying to take it down under 1,400. I don't know if they can. It's above the moving average. It is stretched. The test of 1340 or 50 again is totally acceptable. But what is going to be the next catalyst to get this going up? I don't know at this point what the next catalyst, because we're going to need one catalyst after the next to keep this going up. So we just got to watch and wait. Anyway, that's about it, people. Have a good rest of your weekend. Ciao.